My name is Farhan. This video will teach you how to use the reducing balance depreciation method. You will also learn to calculate the profit or loss on disposal. This is question number 11 taken from 2020 Paper 2 exam. If you need some last minute help with preparation and you want to ace your exam, make sure to check the links in the description. I'm offering multiple tutoring sessions throughout the entire month on various topics. With that being said, let's get started. Li Ming is a sole trader and has annual accounts prepared to 31 March 2020. The following information has been supplied. A non-current asset was sold on 30 November 2019 for £7,000. This £7,000 is what we refer to as the disposal proceeds. The non-current asset had been purchased on 1 July 2017 for £16,000, and we are required to use the reducing balance method of depreciation at a rate of 25% per annum. We are also required to calculate depreciation based on the number of months an asset is actually used within the business. So on the right hand side, I've done all the workings. So we understand that the purchase date is the 1 July 2017 and the original cost for the asset is £16,000. Based on the very first line of the question, which says that annual accounts prepared to 31 March 2020, we can understand that Li Ming's business has a financial year which starts on 1 April and ends on 31 March of the following year. The first year of usage for this asset will be from 1 July 2017 and will end on 31 March 2018. So if you want to find the depreciation using the reducing balance method, in the first year, what you have to do is simply take the percentage that is given to us, which is 25% in this case, and multiply it with the original cost. However, we understand that from 1 July 2017 until 31 March 2018, we have 9 months in total that the asset is being used for the financial year ending 31 March 2018. Because the asset was used for 9 months in that financial year, we have to further multiply our calculations with 9 over 12. So 9 over 12 simply means that out of the 12 months that we have in a financial year, the asset was actually used for 9 months. And this also takes care of the adjustment that we need to do with the given percentage of 25. The 25 is an annualized rate. As you can see in the question, it explicitly mentions at a rate of 25% per annum. So once we do 9 by 12 as an additional multiplication, it automatically takes care of the adjustments. And we understand that for that financial year ending 31 March 2018, the asset was actually used for 9 months, given that it was purchased on 1 July 2017. So once you incorporate all these numbers together, we understand that in the first year of usage, the depreciation expense for this asset is £3,000. Because you're using the reducing balance method, always remember to calculate the net book value at the end of the financial year. The net book value can be calculated by taking the original cost and subtracting the total depreciation at a given point in time. So in this case, the original cost is £16,000, which we understand based on the second line of the additional information. And we are subtracting the total depreciation in the first year of usage, which is £3,000 based on our calculations. And we get a net book value of £13,000 at the end of the first year of usage, which is at end of 31 March 2018. Now you want to move on to year 2. So year 2 will start on 1 April 2018 and end on 31 March 2019, which means in year 2, this asset was used for the entire 12 months. So if you want to find the depreciation in year 2, and because you're using the reducing balance method, we now apply the given percentage of 25 on the net book value that we had calculated at end of previous financial year ending 31 March 2018. So 25% is multiplied on the net book value that we had calculated at end of the previous financial year. So 25% multiplied by 13,000 will give the depreciation for year 2 to be 3,250. Again, you want to find the net book value always when you're using the reducing balance method. If you want to find the net book value at end of year 2, you just simply take the net book value at end of year 1, which was 13,000, and then you subtract the new depreciation of 3,250, and you should get a net book value of 9,750 pounds. Now let's move on to year 3, which is the final year of usage. Now, year 3, as we understand, will start on 1 April 2019, but in this case will end on 30 November 2019. Why is that so? We understand that the asset was sold on 30 November 2019 for £7,000. And we also understand that when you want to find the depreciation, you calculate it based on the number of months the asset was actually used in the business. So from 1 April 2019 until 30 November 2019, we have 8 months in total. So which are April, May, June, July, August, September, October, November. So 8 months in total. So if you want to find the depreciation for year 3, so we take the given percentage of 25 and multiply it on the net book value that we had at end of year 2. And then we multiply with 8 over 12, which adjusts for the fact that this asset was used for 8 months out of the 12 months that we have in a normal financial year. So once you incorporate all these calculations, you get a depreciation of 1,625, a depreciation expense of 1,625 pounds that is relevant for the 3rd year of usage. After that, you want to find the net book value again. Always find the net book value whenever you're using the reducing balance method. And it's simple as taking the net book value from the previous financial year of £9,750 and then subtracting £1,625, which is the depreciation expense for year 3, and you should get a net book value of £8,125. Now, the question requires us to calculate the profit or loss on disposal. Now, we understand that the asset is sold for £7,000, which is known as the disposal proceeds. And we also understand, based on our calculations, that net book value right before disposal was £8,125. This means before we sold our asset had £8,125 worth of value that was still left for usage. And you can understand that we have sold the asset for £7,000, which is significantly less than what was the remaining net book value within the asset, which refers to the fact that we sold this asset for less than what it was worth, which is known in other words as a loss that we have made on disposal. And the amount of the loss can be calculated by simply finding the difference between the net book value and the disposal proceeds, which is the difference between 8,125 and £7,000, and that is £1,125 as the loss on disposal for this asset. Now let's move to the second part of the question. Now the second part of the question says that the following balances have been taken from the draft accounts for Li Ming for the year ending 31 March 2020. The draft accounts here simply refer to unpublished or not formal accounts. So we are given the balances for drawings, the profit for the year, and we're also given the capital at 31 March 2019. So capital at 31 March 2019 would simply mean that this is the opening capital at 1 April 2019 if we are doing all the calculations for the financial year ending 31 March 2020 as per the requirement of the question. We also have some extra information here. The depreciation charge for the year ending 31 March 2020 has been included in the draft profit for the year. However, the profit or loss on the disposal of the non-current asset has not been included. So we already understand that we have made a loss on disposal of £1,125. So if you make a loss on disposal, what's going to happen? The expenses are going to go up. And if the expenses go up, then the profit should go down. So therefore, the draft profit that we have been provided here in the tables of £42,817 would now need to be reduced by £1,125 because of the loss, which increases the expenses of the business. So the revised profit is going to be less at £41,692. Now, if you want to complete the capital section extract at 31 March 2020, we start with the opening capital. So the opening capital, as I've explained earlier, is the closing capital from end of previous financial year at 31 March 2019. So you can write opening capital or you can write capital at 1 April 2019. It's the same thing. And it's £168,950. Then we add profit for the year, which is £41,692. This profit has been revised based on the loss and disposal that we had just included, which increases the expenses and therefore decreases the profit. Then we are subtracting drawings of £30,000 because drawings refer to a reduction in owner's equity. And then once you do all these calculations together, the number you end up with is £180,642, which is what we call the closing capital or the capital at 31 March 2020.